Intel just released their Q2 earnings report in which they are down about 9% after that report, where they reported a mixed bag in which they reported their EPS at negative 10 cents, which missed by about negative 11 cents. So analysts expected this company to post profitable earnings, however they came in negative. But at least on the revenue, they did report $12.86 billion in revenue, which beat by almost $1 billion. So on the revenue, they did a huge beat, but on the earnings per share, it did come up disappointing. I think the big news from this earnings report out of Intel is actually that they're going to be cutting a lot of spending, in which the new CEO, Tan, which replaced Pat Belsinger, is a big advocate for cutting their spending, which they're going to be cutting their workforce by nearly 15%, and also they're going to be halting some of their plants in Germany and Poland, so they're going to be decreasing the spending by a lot. Because the CEO does think that they have fallen way too far behind companies such as Nvidia and AMD, they're going to be trying to turn this company around using a financially smart approach by not trying to spend as much because they've already fallen too far behind to basically catch up to these companies. But I would like to add that while this company does seem dead, at least they do have some key customers such as Dell, HP, and Lenovo still buying from this company. So at least they're not losing a lot of customers. They definitely are, but they still have some big players still buying these chips. And they also have a pretty significant presence in the cloud computing space, where they also have customers like Microsoft and AWS. So I don't think Intel is necessarily going to go anywhere, but they're definitely falling behind by a lot, and I don't think they're going to be able to do stuff like Nvidia and AMD. So with that being said, I'm going to be using my 7-step stock analysis to look at the financial health of Intel. Then at the end of the video, I'm going to be using my intrinsic value calculator to determine the fair value price of this company and to see if we should buy this stock today after this huge dip in price. The first two metrics I'm going to be looking at for Intel is the PE ratios, which gives us a sense of the valuation of the company. And the PE ratio is the price of the stock divided by the earnings per share. So this is going to be telling us basically how much money you're spending for $1 of earnings per share. And I want to see the trailing PE ratio just positive, which means the company is profitable. And as we can see here with the trailing PE ratio, it is positive at 88.08 right now. The current PE ratio is at least profitable, but it is very high, especially when compared to the stock market. Stock market trades at about a 25 to 30 P ratio, so this looks very high, and with this low growth from this company, this doesn't make a lot of sense. But the reason it does make sense is because if we see over the past 2 quarters, they have had negative net income. So this makes sense why the P ratio is so high, because this company is not even profitable right now. Even though the trailing 12 months it is, right over the past few quarters, they've been losing money. And looking at the forward P ratio, this is similar to the trailing P ratio, but this is the earnings per share in the next year. So this is what analysts expect their earnings per share to be. And with the forward P ratio, I want this less than 30, meaning we're going to be paying less than $30 for $1 of earnings in the future. And right here, Intel's at an 84.03 forward P ratio, meaning you're going to be paying $84 for $1 of future earnings per share out of Intel. So this is insanely high P ratio, especially for the growth of this company. Now I'm going to be taking a look at the revenue growth rate from Intel over the past 5 years, and I want to see this growing at greater than 5%. But as we can see here, Intel is decreasing over time, and this looks very bad for Intel with their revenue. This is very bad. The sales of the company is going down. You would at least want to see this to be profitable, but nonetheless, this is going down at about negative 6% each year. So the company is losing sales, and this is very bad for Intel. This is mainly because of them falling behind Nvidia and AMD. So this is very bad revenue growth. And similarly to the revenue growth rate of growing at greater than 5%, I want to see the net income growing at greater than 5%. But once again, with the revenue growth rate, we can see the net income is decreasing over time. Look at this. They were making over $20 billion just 3 years ago, and now they're losing about $20 billion. Intel, this company's financials look terrible. So right now, I'm already saying I'm staying away from this company. But we have to continue to look at all these 7-step stock analysis that I have and look at all these metrics. But right now, I'm already saying I'm not going to invest in this company. And taking a look at the shares outstanding of Intel, we can see they were buying back a lot back in 2020 and 2021, which was good but not, because the company has been doing terrible since then, meaning they have lost over 50% on these buybacks. So number one, they were buying back shares at high valuations, and now they're starting to sell these shares at losses. So I have no clue what this company is doing. This just looks stupid to me. They're basically buying back shares at near highs. Now they're going to be selling these shares at near lows. And so far, the management looks terrible, and hopefully this new CEO could turn things around, but this just looks terrible to me. And taking a look at the balance sheet of Intel, I want to see a total debt to equity ratio less than 50%. And right here, Intel has a 47% total debt to equity ratio. So at least they finally get a decent check mark that actually is worth something. And at least the total debt doesn't look terrible. But looking at the total cash compared to the total debt, 21 billion in total cash, but 50 billion in debt, meaning they have about 30 billion dollars in net debt. And taking a look at the free cash flow, last year they had negative 7 billion dollars in free cash flow, meaning this company is losing money every year and has over almost $30 billion in net debt. This company looks terrible right now, and I am definitely staying away from this company. And taking a look at analyst expectations for the next 5 years for their earnings per share growth, I want to see a greater than 5% analyst expectation. And as we can see here, at least analysts do expect them to be growing at greater than 5%, at 10.5%. But to be honest, I don't think that's very hard when the company's losing almost 20 billion a year. So at least analysts do expect them to grow at greater than 5%, but still being negative $20 billion, I hope you can start growing at some point. Now taking a look at my intrinsic value calculator for Intel, I have to use future assumptions for valuing this company. And the first thing I have to do is the future annual revenue growth rate I think that they're going to grow at. So there's two camps for Intel. Either you think this company is going to turn around, or it's just going to continue to die out basically. And me personally, I think Intel might slowly die out. Do I think that the company is going to go bankrupt in the next, say, 5 years? Probably not, but it's definitely not out of question with how much debt they have and how much money they're starting to lose. But I do think that they're going to decrease their revenue each year. They've been decreasing at about 6% over the past 5 years. So let's say they decrease at 5% each year, in which I think their revenue in the next 10 years will be at $31 billion. So I think they're definitely going to decrease over time, but at least they do have customers that are still willing to stay with Intel and actually buy these chips. So I don't necessarily think that their customers are just going to leave them, but I do think that's still going to decrease over time. Now looking at the net profit margin for Intel, we can see that over time, they were at a 30% net profit margin just in 2020. And obviously as of right now, it's at negative 36%. So this looks very bad for Intel, but I'm going to be bullish for Intel on their profit margin. So with the future profit margin, I might give them the benefit of the doubt. Let's say they get to 5%. Just because we're going to try and make this value calculator actually work, because if the company's losing money, we can't use this intrinsic value calculator since it's based on the net income of a company. But let's say they get back up to 5% profit margin. And now for the future P ratio, since this company is going to be decreasing over time, high debt, I don't think this company deserves much of a P ratio. Maybe 10 might be even too high for Intel because of how terrible this company's financial health is, and the stock market's trading at about a 25 P ratio. This looks like one of the worst companies so far I've analyzed so far, so this looks very bad. And now for the shares outstanding, I'm just going to say it's going to remain the same. I don't know about this company. I think it's going to remain the same, but this could be probably wrong. I'm not even sure what they're doing with the shares outstanding, so I'm just going to keep this constant. And with that being said, I get a future share price of $3.64. If you bought this today, I think you're going to lose about 15% each year. So this looks very bad for Intel. I'm 100% staying away. But let's just say that their future profit margin somehow gets near where it was before, 25. Let's say that it gets near it. And I still think that right now, you're going to lose money each year on Intel. So I'm 100% staying away from this company. And I do think Intel is a dead company. NVIDIA and AMD has surpassed them like crazy. So I think this is a dead company. So thank you guys for watching this video on Intel. Please subscribe, hit the like button, comment down below what stocks you want me to analyze next, and see you.